Deepak Nitrite Limited Q1FY24 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ranjit Cirumalla from IIFL Securities Limited. Thank you, and over to you, sir.
Thank you, Darwin. Good afternoon, everyone, and thank you for joining us on Deepak Nitrite's Q1FY24 earnings conference call. Today we have with us Mr. Maulik Mehta, Executive Director and CEO, Mr. Sanjay Upadhyay, Director, Finance and Group CFO, and Mr. Somsekhar Nanda, CFO, Deepak Nitrite Limited. We will begin the call with opening remarks from the management team, followed by an interactive Q&A session. To begin with, Mr. Maulik Mehta will share his views on operating performance and the growth plans of the company, followed by Mr. Sanjay Upadhyay, who shall take us through the financial and segmental performance. I now invite Mr. Mehta to share his opening comments. Thank you, and over to you, sir.
Good afternoon, everybody, and a warm welcome to all of you on Deepak Nitrite's Q1 FY24 earnings conference call. To begin, we pay tribute to Shri C.K. Mehta, the visionary founder and chairman emeritus of Deepak Nitrite Limited, who departed peacefully, surrounded by family on July 3rd, 2023. Over 50 years ago, he dreamt of Make in India, leading to the establishment of Deepak Nitrite Limited, a professionally driven organization epitomized by strong values, excellence, and responsible chemistry. His legacy of nation building by serving society continues to inspire and guide the Deepak Group. As we cherish his illustrious life, filled with inspirational moments, and fondly remember him for his contributions to the nation, to society, to the company, and to our entire fraternity of stakeholders. Our results documents were shared with you earlier, and I hope you have had the opportunity to glance through them. I will initiate by briefly taking you through the key financial and operational highlights for the quarter ended 30th June. Mr. Upadhyay will then present you with a more comprehensive financial overview during the period under review. Following this, we will open the forum for a Q&A session. As we stepped into fiscal year 24, we faced an array of challenges arising from global macroeconomic pressures and slower than anticipated demand from key customer segments. The Indian chemical industry, including Deepak Nitrite, was impacted in Q1 by factors such as additional supply from China's opening up, a global destocking of inventory, and a slowdown in the Eurozone. This has led to the softening of realizations and impacted the volume offtake. In order to safeguard profitability and market share, the company proactively took several measures, like exploring new customer opportunities, optimizing procurement, and evaluating valorization opportunities of byproducts, apart from continuous improvements around operational excellence. These have helped us to operate plants efficiently and consistently deliver supplies to customers while making progress on growth initiatives and strategic parameters. During May, we reported our highest ever production for some of our products, showcasing a solid business resilience. Notably, we have been able to export key pharma and agro intermediates to China during the last 2 quarters, and we will continue to do so. We have also successfully enhanced wallet share in each and every one of our products. Apart from carefully navigating the challenges, we made progress on strategic endeavors. We proactively de-risked our business model by securing assured input supplies from alternate sources. We have recently commenced captive power supply and are driving value from waste. Further, the growth initiatives to enter into substantial supply contracts in all segments ensures a clear pathway for sustainable growth. A development that I am personally excited about is the setting up of a world-class R&D center in Vadodara. This R&D center is under implementation and will allow us to further deepen our capabilities and expertise across existing as well as new complex chemistries. We've also made considerable progress on all of our growth initiatives and capex plans, making Q1 a fairly eventful quarter on all counts. With this backdrop, I shall share an overview of the performance. In Q1, consolidated revenues were 1,800 crores, lower by 13% YOY and 9% QOQ. The challenging industry-wide conditions amid opening up of China, inventory destocking, etc. We believe that this is transitionary and have undergone several such cycles in our history. Our focus during the quarter was on factors within our control, such as optimizing of procurement, operational excellence, exploring new opportunities with existing and new customers, and new products that we have enhanced our valorization opportunities for. This has enabled us to partially mitigate the impact of prevailing weak industry trends, but we must also remember that many of these are sustainable improvements and will take us well into stronger quarters as well. EBITDA for Q1/24 was 242 crores, lower by 33% YOY, translating into an EBITDA margin of 13%. The changes in the global chemical landscape, intensified by China's product dumping at lower prices, resulted in lower sales realization. Sales at several key products, including phenol, owing to a general sluggishness of market, impacted our overall performance. Consequently, PBT and PAT for the quarter declined by approximately 36% year-on-year. However, in most of the cases, we have been able to either retain or increase wallet share. Projects under implementation for brownfield of existing products and processes and capexes for assured supply of inputs using various capexes, including photohalogenation and complex halex, which is fluorination, as well as projects for acid supply, are expected to be commissioned over the next 6 to 8 months. These will enhance our competitiveness, and together with the cyclical recovery in prices, will buttress our profitability going ahead. Now coming to our segmental performance, in Q1, the Advanced Intermediate segment generated revenues of 719 crores, lower by 3% on a YOY basis, amidst a decline in input prices and hence realizations. Despite inventory destocking by our customers, our margins in AI remained steady. As a result, segment PBT was resilient at 115 crores as compared to 131 crores last year. Deepak Phenolics reported a revenue of 1,089 crores in Q1. The decline in revenue and EBITDA is due to a sharp contraction in phenol spreads due to a supply glut arising from the opening up of China, as well as a slowdown in global markets and spreads being at a multi-year low. We do have to also mention that the phenol plant was shut down for the first time in 4 years for its own regular maintenance change, and this was for 15 days in the beginning of the quarter. We also looked at the improving raw material trend to sell finished products at a much more accelerated rate, and we entered Q2 with a multi-year low opening inventory to take the best advantage out of the improved feedstock prices. The Phenolics division aims to enhance downstream offerings through projects such as MIBC and MIBK, which will lead to higher captive utilization of acetone and accretive margins. Looking ahead, we are strategically positioned to capitalize on increasing demand and benefit from the trend of import substitution in India. The acetone derivatives have made significant progress on ground for the project execution. The plant is expected to be commissioned in the first half of FY25, enabling downstream value-added products. In a key development, Deepak Chem-Tech Limited, our wholly owned subsidiary, signed a 5,000 crore MOU with the government of Gujarat to manufacture specialty chemicals, phenol acetone, as well as bisphenol in the state. DCTL will invest approximately 5,000 crores across these projects with the aim to commence the first phase in 24-25 and complete the projects by 26-27. Just as health indicators, I'd like to share, because I know that this question will come up during the discussion. In Deepak Phenolics, we expect quarter 2 to be better on a YOY basis as well as a QOQ basis. In Deepak Nitrite, we expect quarter 2 to be flat on a YOY basis and improved on a QOQ basis. And on a consolidated level, we expect both Deepak Nitrite and Deepak Phenolics together to be able to deliver better on QOQ as well as YOY. So in closing, I'd like to emphasize that Deepak Nitrite is well positioned for expansion in various aspects with a strong integration in the value chain. Our investment plans, which at the moment the projects under execution amount to about 2,000 crores plus or minus, reflect our enthusiasm to seize opportunities both in India and worldwide. We continue to diversify our product offerings, expand our client base, and enhance overall value propositions. With a strong financial position, valuable customer relationships, and well-considered growth initiatives, we're poised to elevate our business proposition. Our expansion plans will improve our competitiveness, grow market share, and generate value for all stakeholders. I'd now like to hand over the call to Mr. Sanjay Upadhyay, who will address this forum and take you through the financial performance and key updates during the period under review.
Thank you, Maulik. Good afternoon, everyone, and thank you for joining us today on Deepak Nitrite's earnings call. I'll walk you through the highlights for the financial results for the quarter ended June 30. Deepak performed impressively during the quarter despite a challenging environment which impacted most of the chemical industries all over the world. In Q1, consolidated revenues were lower by 13% year-on-year at around 1,800 crores due to declining realizations and lower volumes in light of inventory destocking by global customers. In spite of that, Deepak Nitrite's volume share has not gone down, neither the wallet share. But the impact is largely because of the price realizations, which were lower as compared to earlier period. EBITDA was 242 crores, down by 33%. Spread across key products in phenolics have reduced from the levels witnessed in past quarters. In fact, phenol witnessed further multi-year cyclical lows this quarter. As a result, EBITDA margin has compressed to 13% during the quarter. PBT and PAT decreased to 202 crores and 150 crores respectively. Our domestic business generated revenue of 1,432 crores, while export revenues were at 336 crores during the quarter. Moving to our segmental performance, in the advanced intermediate segment, revenues decreased by 3% to 719 crores in Q1 versus 739 crores in Q1 FY23, while EBITDA was down 9% to 136 crores during the quarter under review. The advanced intermediate segment reported a resilient performance at the back of the diverse product portfolio and strong customer service capabilities, performing very creditably despite the challenging industry backdrop. Deepak Phenolics reported a revenue lower by 19% to 1,089 crores in Q1 versus 1,338 crores in Q1 FY23. EBITDA was 107 crores, down by 51% in Q1, while EBITDA margin came in at 10% versus 16% in Q1 FY23. The company's working capital position improved by rupees 121 crores. Advanced intermediates by rupees 41 crores and phenolics by 82 crores. In Q1 FY24, DNL witnessed exchange rate volatility ranging from a peak of 82.85 to a low of 81.61. To manage the forex volatility risk, the company employed dynamic hedging strategies, which led to a gain of 0.24 crores in Q1 FY24. Lastly, on the balance sheet front, company's financial position continues to be strong. Being net zero debt company and with solid cash flows, we are well placed to execute on growth plans. In the quarter, we effectively managed surplus funds to make advance payments to select suppliers, receiving cash discounts, and invested remaining funds in safe investment avenues as the surplus funds are in the process of being deployed in growth prospects. As a result, we achieved an aggregate gain of 8.6 crores in Q1 FY24. On a consolidated basis, the company remains debt-free and boasts of a substantial net worth of 4,240 crores. This will facilitate leveraging in balance sheet for potential expansion projects as and when needed in the future. This was explained in detail by our chairman in the AGM last week. In the quarter, our cumulative investment in its wholly owned subsidiary DCTL was 499.5 crores. Of this, 94.5 crores was invested in Q1 FY24 itself. The total investment in DCTL comprises 9.5 crores in equity and 490 crores in CCDs. Approved projects are being executed as per plan. We are poised to announce commissioning of projects over the next several quarters in a phased manner. Once commissioned, the plants will help secure internal supply of critical raw materials and thereby elevate the profitability levels at full utilization. Further, the company is building world-class R&D center, as explained by Maulik near Vadodara, to solidify its capabilities and expertise across complex chemistries. While accelerating growth momentum, while existing R&D setup keeps working on various products and processes. With that, I would now request moderator to open the question answer session, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Madhav Marda from Fidelity International. Please go ahead.
Hi, good afternoon. Thank you so much for your time. I just had one very broad question. I think in the initial remarks you mentioned that you all have seen quite a few such cycles in the history of the company. Just wanted to understand, what are the key things which are similar and key things which are different in this cycle versus the past ones? And in your view, what could help in this cycle sort of correcting itself and things coming back to more normal levels? That would be very helpful.
See, when we alluded to the fact that we have seen several cycles, what we mean is, in a general sense, when new capacities are coming in, you will always have a short period of time when demand grows. The demand grows at a relatively consistent pace, 5, 6, 7, 8% CAGR. But when capacities come online, they come online in a sudden manner. So over a period of time, this normalizes, so the demand is able to match up to the capacity that has been commissioned. And hence, when we're talking about commodity chemicals, where Deepak Phenolics plays largely, you have such situations of bull and bear cycles, but over a period of time, they normalize. Similarly, as China has always been, over the last 25 years, a significant player, maybe the most significant player in the production of chemicals. Generally, what ends up happening is that this production comes online in a normal market situation. What we have right now is a perfect storm where there is low consumption in China and sudden unlocking of COVID measures in China have pushed a lot of volume out. But globally, because of tightening interest rates, there is also the headwind with regards to long-term visibility on consumption. Let me clarify that in the short term, demand is there, consumption is there, but customers are not able to project a situation beyond the next 3 to 6 months. And wherever they are, that is simply because they may have their own downstreams tied up in the consumption markets as well. So cyclicality on this sense in the chemical industry, whether it is in specialty or in commodity chemicals, from the involvement of players like China and from the involvement of players like Europe, this we have seen. And we expect that Deepak is not only well positioned, but will be having an opportunity to be able to make significant strengthening of its moat as we move forward.
I would just add one thing to this. Though cyclicality is affecting the prices, we are able to maintain, I repeat, our volumes. Even if you see phenol is there, we are confident that we will achieve last year's production level, and maybe we'll not production but the turnover, and maybe we'll cross that also. So our the market share remains intact, and the position in which Deepak Phenolics is, we are certainly, once the demand picks up, we are very confident we will do better than what we have done in first quarter.
Got it. And just a follow-up from my side would be that, so the key thing to watch out for incrementally is China's own domestic demand kind of coming back, and that should solve for a lot of challenges that the global chemical industry faces. Is that like one key thing to watch out for, or which are the other pointers that we should look at to sort of think about recovery?
So as generally, as interest rates stabilize, as global consumption comes to a point where they are able to project over a longer period of time, as I mentioned, right now customers also have a visibility of only a couple of months. But as they become confident that the global situation is stable, even if it is stable at a higher level, they are very happy to place a long-term commitment for volumes. But at the same time, China is picking up its internal consumption as well. So whatever you see, which is a slowdown in terms of month-on-month exports as well as imports in China, a large part of this is prices, not so much volumes. Volumes are intact in that sense. And as we move forward, we expect that China will go closer towards its own self-sufficiency, and India will be more linked with the rest of the world in terms of global demand and supply.
So the India supply chain diversification theme, which has been a key driver for growth for the companies in India, that kind of still holds, right? This is more of a cyclical challenge than anything changing structurally on the ground.
Yes, but I will also caution that it is easy for companies and for investors to just bet on the same horse. So this is certainly a key driver, but by no means is it the only driver. And there are other important factors at play too, including but not limited to the Indian companies' own resilience and competitiveness. Companies like Deepak are used to competing with China, so our performance matches China's ability to perform on the best of days as well as the worst of days. So we don't necessarily need to depend on China doing well or badly in order to have a level of resilience from our own operational excellence.
Okay, got it. Thank you so much.
Thank you. The next question is from the line of Nirav Jimudia from Anvil Research. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
I have two, three questions on the R&D part, which is mentioned in our annual report. So one is we mentioned that we have successfully implemented a process for a chemical which is used as an agro intermediate. Further, it is written that this involves a process where a lot of new ideas across the chemistry and engineering was implemented to achieve the desired critical to quality parameters. So if you can just elaborate more on this with respect to the changing capabilities prior and now, where the samples have already been approved by the customers, and how much of this product in terms of the opportunity size, the wallet share could come to us once the production is ramped up from Deepak?
No, Neeraj, thank you for the question, but I can't answer it. What I can tell you is that we have been able to not only have the product approved with regards to quality, but we have been able to achieve best-in-class atom efficiency as well. So moving forward, what we have done is we have bet not only on being able to deliver the product, but doing it with a degree of sustainability which is higher than other industry peers. And more such products will come out from Deepak's stable, which will not just be, they may be Me Too products, but they will be utilizing processes which are unique to Deepak. We may have taken an existing process, but we have significantly improved it. And in some cases, we have added new processes which are not currently done by, I think, any company in the world at this moment. So as we are able to commence, commercial production, we will be able to give more visibility. Right now, it is very, very premature. But I can give you an example. What we have done, for example, in phenol, is we took technology from the best technology provider in the world. And the process that we have today is optimized to a level where the technology supplier, even though other potential customers have gone to the same supplier, the supplier is unable to match the productivity and the efficiency which Deepak has on a day-to-day basis. So this is our in-house internal capability. And until now, we have only been using it to improve existing processes. Now we are applying it to improving novel processes as well. I know this all sounds very vague, but we will hope to add more color over the forthcoming quarters. So all of this will be done largely in-house.
Okay. But then whenever we will ramp up and the commercial production is on, it is safe to assume that we'll be the few producers of this product in the world, and suffice to say that we'll be the lowest cost producer of that product being supplied?
Yes, that is for sure. And we hope to be able to take so what we've done always is start off with whatever, but over a period of time we have been able to become a dominant supplier for pretty much all of our products, at least in Deepak Nitrite. Compared to any global scale producer, we are at world scale. So hopefully moving forward, we will not just be one of some, but we will be one of very, very few. Also, I agree that we will have the best atom efficiency in terms of our conversion from raw materials to FG.
And we should see some contribution to the top line in second half of FY24, right?
No, this will see value addition in the first half of 25. There are separate capexes which will have revenue as well as PBT add in the later part of this financial year. But I think to be on the safe side, you should look at a full year starting next year, not this year.
Got it. The second observation is also on the one qualitative remarks which you have mentioned in the annual report regarding the pilot facility for the vapor phase process which we have installed. I think which supports very high pressure oxidation reaction for adipic acid as well as the salicylic acid. So if you can provide some insights, qualitative would also help in terms of what is this actually and how this will help us in developing the further value added products.
I would not like to comment on those.
Okay, got it. So last thing is on the spent sulfuric acid capex, or the plant which we have commissioned. So if you can share the capexes as well as the cost savings which could accrue to us with the commissioning of this plant.
So the plant has been commissioned, but cost savings are not the right way to put it because we have significantly reduced the volume of spent that we will push out.
Okay.
And cost savings are always going to be in relation to the price of fresh acid. What I would like to, however, say is that this will add a significant score advantage to our scope 1, scope 2 emission disclosures. And more than that, it allows us to have a more sustainable operation where we are less dependent on external vagaries. So, all of these things have a cost of energy, a cost of fresh material, and these things change So it is difficult to give you an exact number. But anyways, what I can tell you is that the spent acid concentration plant fit well within our our internal benchmark with regards to savings, and has the significant added benefit of improving our ESG. So I look at it from not the bottom line, but from the right thing to do.
Got it, sir. Thank you so much, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So first question is on the new R&D center. So we have been building capabilities over the last few years, and that is also displayed in terms of the newer product that we are working on and the projects which are getting commissioned. So what are we incrementally working? I mean, we plan to work on through this new R&D center. So is it that we now would be also focusing on exports market, given that predominantly earlier our focus was on import substitutes? So your thoughts on the same from a vision perspective. Thank you.
So we supply to the import substitution market, but more and more the import substitution market has become a good foil for the global market, because more and more of these multinational companies have started putting up their own investments into India or have tied up with converting partners in India. So now we don't look from Deepak Nitrite's perspective at just an import substitution, but we look at it from the perspective of making in India and making it in order to be able to supply to the world, which of course includes India. So the processes that we are building up in our R&D center, some of these are the processes which we currently have in our technical toolkit, and we are adding new processes in this which are at a very advanced stage. And what we are doing is we are ensuring that we have a very high level of integration, both software integration as well as hardware integration, between our R&D, our scale-up facilities, and what we would call our challenge product, challenge capability plants, which are somewhere between mini plants and pilot plants, where we are able to demonstrate our capability. Now we are also getting into a lot of gas-liquid reactions and gas-gas reactions. And as I have mentioned earlier, we are going to be, we are moving ahead with at least 3 life sciences products which will be downstream of our existing product basket. And these are, as I have earlier also mentioned, going to be tied up with strategic customers in multi-year contracts. And we'll have some small volume of sale into the market as price discovery also. So these will all be taking place on an accelerated basis in our new R&D center. What it will definitely allow us to do is it will allow us to do more of the same faster, rather than keeping everything in a long line of projects that need space from the assets that are available. Along with that, it will also allow us to get into a couple of new processes which I would not get into details of right now.
Sure, sir. This is helpful. Sir, second question is on phenol. So in your opening remarks, you alluded that there have been supplies coming from China. So does it mean that there have been significant capacity additions in China which are over and above their internal consumption, and that will probably have some bearing on the spreads over the medium term? And a second light question to that, in terms of the capacity debottlenecking that we're talking about of 10%, so after the debottlenecking, our capacity would increase to 330,000, from 300,000. Thank you.
Okay, so for the first part, we are not seeing any significant imports of Chinese phenol into India. However, because China is the largest producer in the world, its presence on a global stage means that there is an increased pressure from non-Chinese phenol suppliers to also participate in the Indian consumption. Nonetheless, as we alluded to in our opening remarks, Deepak has been able to maintain as well as grow its wallet share. So while these imports were there before we started, these imports continue even when we are running our plant. We expect that these imports will continue even in the future. Sometimes this is because the new capacities that have definitely been commissioned in the last 6 months have not yet had their downstream capacities commissioned, which generally may happen with a delay of a couple of months. Nobody wants to be in a situation where they commission the downstream first and then the upstream. So this may have a transient effect, but all I can say is that yes, there will always be this pull between what the changes in terms of RM and the changes in terms of FG, especially for a commodity chemical like phenol. But we remain confident that we will maintain or grow our wallet share in India as India's consumption continues to increase, even compared to the rest of the world where consumption may be moderating or slightly decreasing. India is a bright spot on the global economy when it comes to the consumption, and Deepak is in a prime position to be taking advantage here. Second question that you asked with regards to the capacity, rather than going into numbers, 330, 3 this, 3 that, whatever, what we can say is that on a debottleneck basis compared to the design capacity, Deepak should at will be able to produce about 150% of what it had invested to produce in 2018.
Actually, I would rather elaborate here also that, see, when you say debottlenecking, the process is already on. We have touched this capacity, say 135, 140% with, this is not a one shot go. This is now debottleneck and capacity will go up like this. It has gone up. If you observe last 1 year, we have definitely gone up from 220, 225, 230 to 260, 270, 280. So this is how it is. So, and to put any number is difficult because our team is capable of doing much more than what we say anytime. So we are very confident that we will deliver, as Maulik mentioned, about 150% on a consistent basis. That's the approach. It can cross even beyond that.
Thank you. The next question is from the line of Anas Dadarkar from Value Quest. Please go ahead.
Yeah. Hi, good afternoon, sir. So actually, I didn't quite get the last part where you mentioned about the Chinese imports. So if you could just repeat what you said, because I understand, I think in the Q4 call you mentioned that the company doesn't have any competition from Chinese phenol manufacturers, right? So it's still a little bit of easy. So if you could just throw your...
Direct phenol from China, there is some in India, but it is very, very small. But because China is a large player, its supply into the global market disrupts other suppliers who then divert more volume to India. This is a normal situation. You have to think of phenol like any benzene, toluene, xylene, where it's an ocean. If one place gets occupied, it's like water. It moves into another location. Please continue.
Okay, got it. So no, that's it from myself. Basically, you're just saying it's a second order effect. But, other phenol is coming into India. Yeah, got it. That's it from my side. Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. First question on the advanced intermediate side. In your opening remarks, you did mention 3% YoY decline is largely led by realizations, while volumes have been largely intact. Just wanted to understand within the segment, considering from, let's say, the basic product or the value-added segments, is there any, significant diversion there? And how has been the competitive intensity in both of them?
Okay. So let me give an indication of what we are seeing in the end application industries. So plywood, and I'm telling you about the company as a whole, including Deepak Phenolics. Plywood and construction, we are seeing an improving trend for sure. Auto, we are seeing somewhat of an improving trend. And what I'm telling you right now is on a sequential basis, just to be clear. Pharma is relatively flat or slightly better. Dyes is flat, but it is flat at a low point over the last couple of quarters, dyes has not picked up to what it was maybe about a year and a half ago. Agro also flat, paper and textiles also flat, but also at a very low level. So where I am saying that we are seeing an improvement is on the basis of how we see quarter two going, where there are certainly shoots, green shoots that are visible, as I mentioned earlier, in the construction and the auto segments. And the other places where we see an improvement is because we are able to take wallet share away from other players who are in the same product.
Sure, sir. And from a growth perspective, given that we have been launching newer products earlier as well, and now also there are plans of the new value-added products getting launched. How do you look at them, let's say, from a growth perspective in terms of your market share gains with the existing ones as well as the newer customer addition?
So our guidance with regards to growth and the value that growth would bring into our top line and bottom line remains intact. So even today, we see a similar top line as well as a bottom line to all of the capexes which are currently under execution. There are a few other capexes which we have not yet started to execute, which are at the engineering level, and these are also being seen from the same light. Today, we expect a similar outcome from those, but we are going into it with caution, talking to customers, because they also need to be able to give us the same confidence, not only on prices but also in terms of volumes, because these will all be multi-year contracts. But today, I can tell you that there is no drop in our excitement about the existing projects as well as the ones that we have not yet announced.
Sure, sir. And just a follow-up on that, what percentage broadly of the business here will be more on the longer-term basis, more like a client commitment there?
So most of the new products that we get into, will be with significant part of the volume, majority of the volume being on contractual basis. Some brownfield expansions that we do for existing products will continue to have the same blend of contractual and non-contractual. I hope that gives clarity.
Sure, that's helpful, sir. Thank you and all the best. Thanks.
Thank you.
Thank you. The next question is from the line of Abhijit Akella from Kotak Securities. Please go ahead.
Good afternoon, everyone. Thank you so much for taking my questions. I had one question actually with regard to the project pipeline that is getting commissioned over the rest of this year, 23-24. So while we are aware about the intermediate we're integrating to, as well as the acid capacity, both of which will serve backward integration. Any other projects, brownfield or greenfield that were commissioned in the past that we should expect to start contributing, to the numbers over the rest of this financial year?
So at this moment, we have about, give or take, about 2,100 crores, which is under execution. This does not include projects where we have not yet tied up everything. So if we have tied up everything, including the customer contracts, including the RM sourcing, etc., then we would add to this number. So when we're talking about that 5,000 and all that, that is a separate amount because we're still in the process of tying up with customers and all. So this 2,000 is well on its way, and over the next, I think, 1 year or at least the next 5 quarters, pretty much all of these should be commissioned. And this will be a mix 50-50 of bottom line accretive as well as top line accretive. Let me highlight that anything which is top line accretive is obviously also bottom line accretive.
Abhijit, if you're asking about the past brownfield, whatever we have done, the expansion and then the quantities were fully sold. Only issue is that today, if you see the agro industry is not doing that well. The demand is subdued. So there is an impact on those. I mean, we are not running at 100. In fact, we have doubled the capacity. So if you ask me double capacity, are we running fully? Then no. But then we are much higher than the earlier levels. That much I can tell you. The capacities, of course, we had run in past a full double capacity, but today it is lower. And in say nitrite also, we have capacity much more than what we are. But yes, we are running little lower than our full capacity. So today there is a subdued demand in the market, no doubt on that. We are running full, selling higher volumes as compared to earlier years and even this year also. But we still have scope to increase further capacities if the demand revives further.
Absolutely.
No, that's very helpful. So just maybe one follow-up on the advanced intermediates business. Sanjay bhai, you mentioned the sodium nitrite running a little bit, subdued utilization levels. How about the other major products in that segment, like if we take nitrotoluenes or maybe DASTA, etc., OBA, or the finer specialty side? Is pressure sort of visible across all of these? Some another.
No, Abhijit, I see. Let's not get into product specific, but as you know, and we told also that the products going to dyes and dye intermediates, there is definitely an impact. So going to textile also. So there this impact is demand slowdown is certainly felt, and it is there for past 1 year. I mean,